So which blockchain is the better investment? We have Bitcoin, we have Ethereum, and we have ICP. So what we're mainly trying to figure out is which of these assets has the most upside, right? Because some might be higher quality than others, but it doesn't matter if they're not going to outperform, right? So let's dive into what is going on with these assets. We have Bitcoin, whales stacking Bitcoin, right? The ETF launched. We have Wall Street just pouring money into these ETFs. The BlackRock ETF just hit over $30 billion. Why is that? Because Bitcoin is winning the digital gold narrative. The world's starting to realize that it has a fixed supply. So it's just an incredible inflation hedge, right? We have companies like MicroStrategy stacking Bitcoin. This is MicroStrategy's Bitcoin holdings over time. They now have almost 250,000 Bitcoin. That is one company doing extremely well stacking Bitcoin, right? This is the first company doing it. Other companies are just starting to realize how profitable this strategy is, right? This is all the digital gold narrative. And then this happens, right? MicroStrategy unveils aggressive $42 billion plan to acquire even more Bitcoin. That would allow them to acquire something like 5% of the total supply. Again, one company stacking Bitcoin. So it's the ultimate inflation hedge. That's the narrative for it. Nothing's going to really derail it because it is one of the most decentralized crypto assets on the planet, right? So in looking at a digital commodity like Bitcoin, all you can look at are the supply demand fundamentals, right? That's going to move the price. Well, we have massive demand from companies like MicroStrategy, massive demand from organizations like BlackRock. BlackRock CEO Larry Fink declares Bitcoin an asset class, rivaling gold in investment potential. So again, Bitcoin is just dominating the digital gold narrative. Here's a chart of net Bitcoin ETF flows, right? Money just pouring into this asset. Now, why is money pouring into this asset? Because it's a hedge on inflation. The US government printing money like crazy. Here we see in yellow the projection of US GDP hitting 83 trillion by 2050, but our debt is supposed to hit 153 trillion by 2050. The only way they're going to be able to pay for that is to print money. So Bitcoin is dominating the digital gold narrative, which makes it a hedge against inflation, right? So a powerful asset, powerful network, powerful narrative. So that leads us to the price of Bitcoin. Again, that's all we're talking about. Yes, it's a high quality asset, but will it outperform Ethereum? Will it outperform ICP? So the best possible projection when looking at the price of Bitcoin is the Bitcoin power log. The log scale of the Bitcoin chart is in a linear uptrend, right? And so this is probably your best bet on where the price of Bitcoin will go. So by 2026, the green line of this trend has Bitcoin at 150,000. The purple line has it at 500,000, which would make it like a 10x move in 1 year, right? Most likely it stays along the green line. So that's really what we're going to look at. Obviously, if currency debasement gets out of control, the purple line is where this thing is going to go, right? Because one thing Bitcoin is going to do is offset the debasement of currency and the printing of money, right? So if the printing of money gets out of control, it's going to hit the purple line again. It always has in the past, right? So by 2027, if Bitcoin hits the purple line, it's $700,000. And if it only hits the green line, that's $200,000. So based on that rock solid uptrend, Bitcoin is an easy 10x in the next 2 years. Based on this model, this is the Bitcoin stock to flow model. If you look at it, it's been pretty accurate. It has Bitcoin going to something like $500,000 also in the next 2 years. So that's the price action of Bitcoin. Pretty linear, pretty predictable, right? Pretty massive as well. What about Ethereum? Again, we're comparing the potential upside of Bitcoin, Ethereum, and ICP. What about Ethereum, right? Well, this is the story of Ethereum. These are the fundamentals. This is transaction count in the Ethereum ecosystem. In dark green, we see it just flat. Since 2020, literally flat. No growth on Ethereum. We are seeing massive growth on the Ethereum layer 2s, right? Now that looks very, very positive for Ethereum. We have major building by big organizations on top of Ethereum, either the base chain or layer twos, primarily layer twos, but we do have UBS launching a tokenized fund, putting ETH into the heart of traditional finance. So they have a tokenized fund on Ethereum. UBS has almost $6 trillion of assets under management, one of the biggest wealth managers in the world. BlackRock is the biggest wealth manager in the world with $11+ trillion of assets under management. BlackRock is on Ethereum today. We have the biggest organizations on the planet tokenizing assets on Ethereum. That's the bull case for Ethereum. We have these layer twos building on top of it. We have huge organizations building on top of it, right? So that's very positive, but this is where it starts to go a little sideways for Ethereum. And this is the truth of the layer one market. They're all competing with each other. Solana's going after Ethereum. Securitize is the leading tokenization platform, helping bring over $950 million in value on chain. Securitize is the tokenization partner for BlackRock's BUIDL, the largest on-chain fund, and also has tokenized feeder funds, KKR and Hamilton Lane. Massive organizations, right? Carlos Domingo, the head of Securitize, said that Securitize will add native support for Solana, allowing it to deploy its tokenized assets on the network, right? The future is multi-chain. So we have Ethereum that's going to be competing with Solana, right? Daily fees for Solana in orange, daily fees for Ethereum in purple, right? Solana is matching Ethereum. So the layer one blockchain business is now brutal. And guess who's coming after Solana? Sui. Sui just recorded higher net inflows than both Solana and Ethereum. And so that's the nature of the L1 race. It's brutal. There's fierce competition. They all do the exact same thing essentially, except Ethereum is more expensive, right? We are seeing massive organizations building on Ethereum. So Ethereum has the prestige, it has the clout. Big organizations trust it. So that is massive for Ethereum. But these other layer one assets are trying to eat its lunch, right? So there's just major competitions. Eventually, these other massive organizations are going to notice other blockchains. It's just a fact, right? Because these big organizations are going to want exposure to other blockchains. The future is multi-chain. So there's just massive competition in the proof of stake layer one blockchain space, right? So that's kind of brutal for these assets as they all start to compete with each other. Now, because of its first mover advantage, because we have massive building on top of it, JP Morgan has a layer two running on top of it. What the large organizations are going to do is have Ethereum layer twos. That's how they're going to enter this space. So the biggest financial organizations in the world are building on top of Ethereum currently. That's going to propel it in the future. That should allow it to do fine for this next coming bull market, right? Seriously bullish fundamentals. The longer term picture, a little murkier, massive competition among layer ones, right? So Ethereum is essentially trying to copy Polkadot and just be the base chain and have a whole bunch of these relay chains running on top of it. And so what they did, which is kind of brutal for Ethereum, again, it should do fine in the next bull market, but what's just brutal for it is the only way to make it economical for all these layer twos to build on top of it was they had to make it way cheaper for these layer twos to build on top of it, meaning pay Ethereum less revenue and therefore burn less of the Ethereum supply. So this is a chart of the Ethereum supply in the last 30 days going up 0.4% per year. So Ethereum used to be super deflationary because people were paying a fortune to use it. Now it's going inflationary because people are paying a lot less to use it because Ethereum has to compete with the Solanas and the Suis of the world. So just a brutally competitive space. That's the reality of the layer one game. Now let's talk about the price action. So if we look at the price chart of Ethereum, the period of time that it takes Bitcoin to go between 300,000, which is its base case, and 700,000, which is its bull case, Ethereum is most likely to hit, let's say 10,000 base case, bull case 15,000. That's not even a 10x. Right? That's just if Ethereum continues this uptrend. That's a fine return, but again, it has Solana coming after it in a big way, and then we have Sui coming after Solana in a big way. So I do think that's going to hurt the returns of the Ethereums, the Solanas, and the Suis of the world, realistically, right? The earlier stage of the layer one, probably the more upside. Ethereum is one of the later stage layer ones. Right? I think it hits between 10 and 15,000 in the next 2 to 3 years, right? So that's like a 4 or 5x for Ethereum. I do think it underperforms Bitcoin. because Bitcoin is dominating the digital gold narrative. It's in a rock solid uptrend. Ethereum has more issues to work out, right? Now, what about ICP? Remember, all these layer ones are just competing with each other. They all do the exact same thing, right? They provide a base layer one blockchain. What about ICP? Well, ICP is unlike all these assets, right? ICP is a world computer. The internet computer hosts secure network resident code and data, build web apps without big tech and current IT. You can't do that on these other layer ones. Applications are immune to cyber attacks and unstoppable, capable of processing tokens, and can run under exclusive DAO control. So the internet computer is in a world of its own. It's not playing the same game as these other layer ones. The technology is like comparing apples and oranges, right? So we can't come after ICP. You can't build an entire internet application on top of Ethereum, on top of Solana, or on top of Sui or Bitcoin for that matter. So this is brand new breakthrough technology, right? So the big question is, well, who's going to use ICP? Right? We see adoption of Sui, we see adoption of Ethereum, we see adoption of Bitcoin, we see adoption of Solana. Who's using ICP? Look at the big uptick in activity on ICP over the last year. We've been in a seriously brutal crypto winter since 2021. Look at September 24, the massive uptick in revenue on ICP. So developers are starting to use this asset. That is explosive growth. Now, who is using ICP? Again, applications that could not use the other layer ones, like OpenChat, active users daily in orange and active users monthly in white. Uptrend in the depths. This is an entire social network messaging application running on the world computer, new internet, ICP. So we're seeing adoption. Now, how you can compare ICP, Sui, Solana, and Ethereum is in the tokenomics model, right? The more all these blockchains are used, the more the tokens of these blockchains are burnt, right? Making the supply scarcer and scarcer, making your tokens more valuable, right? So Ethereum's going inflationary, Solana's massively inflationary, Sui's massively inflationary. You're going to need so much adoption to get those things anywhere close to deflationary. ICP, with the few applications running on top of it, already became deflationary this year in the depths of the crypto winter, when very few people understand what's going on except for a few projects. Look at the cycles burned by month, excluding burn on blockchain and burn, right? So this is excluding the subnets hosted by Bob and Burn, right? We still see cycle burn going parabolic in 2024. So Bob and Burn are two projects. So excluding those, ICP is still being burned at a huge clip. So it's just a matter of time before it stays deflationary. So ICP is winning the tokenomic game, even though it doesn't have the big institutional adoption. It doesn't need the big institutional adoption because a handful of projects building on ICP will send it deflationary. And that is really all that matters. Because if ICP becomes deflationary, then over time, your tokens are going to be worth more and more. And there's going to be massive upward pressure on the price, right? Solana and Ethereum's long-term goals are to be deflationary. If they're successful, they'll be deflationary. ICP is already getting there. Now let's compare ICP revenue to some of these other projects. So in yellow, we see ICP revenue. In green, we see Avalanche revenue. And in pink, we see the Near Protocols revenue. ICP is already beating some of these other projects you hear about all the time, right? With less adoption, it's already generating more revenue, right? These blockchains are businesses. They're selling block space because ICP's technology is so powerful. Projects are willing to pay it more to use it. That is the secret of ICP. It's not competing with these other layer ones because they don't do as much. Total canister state. This speaks to the building on ICP up and to the right, rock solid uptrend. Canisters are smart contracts. Speaks to developer activity. Average daily message counts for Chain Fusion subnet. That's just one subnet on ICP. Again, hitting records in Q4 2024. The internet computer continues to generate more fees than many Ethereum layer 2s. Another example, in green, we see the internet computer's revenue compared to Arbitrum, in pink, compared to Blast, compared to Starknet in yellow. So this just speaks to the undiscovered nature of this revolutionary technology, right? Because all the crypto world can talk about, it seems, is these layer 2s, Solana, Sui. ICP is just crushing these other assets in terms of the revenue it's generating. We want to buy businesses that can generate more revenue than their expenses. ICP is almost there. It's going to be so much harder for those other blockchains to get there. Bitfinity raises $7 million to advance Bitcoin and ordinal assets on chain security. What does that have to do with ICP? The rumors are true. Bitfinity's L2 mainnet is launching on November 19, opening the doors to EVM-based DeFi on ICP, right? So look out for that. November 19, this project is about to launch. What's that going to do? It's probably just going to spike the revenue on the world computer. Bitfinity is massive. Now we're comparing ICP to Bitcoin and Ethereum, while at the same time, ICP benefits from the growth of those networks. Why does it benefit? Because it actually is a layer 2 on both of those assets. So it's its own ecosystem, but it can also be a layer 2 to Bitcoin and Ethereum. So here's the rock solid uptrend of Bitcoin moving on to ICP. 236 Bitcoin value locked on ICP, 974 Ethereum locked on ICP and growing. So not only does it benefit from the growth of its own ecosystem, it benefits from the growth of the Bitcoin and Ethereum ecosystems, because more and more of the capital in those ecosystems will be flowing onto ICP according to these uptrends, right? So when it comes to the price action of ICP, we're seeing something like a 5 to 10x of Bitcoin, 5 to 10x of Ethereum, roughly similar. I would say Bitcoin probably outperforms Ethereum because it has less competition for the digital gold narrative. But what about ICP, right? Look at the chart of ICP. When we look at other crypto assets that have a similar looking chart, what comes to mind is Cardano. Here's a chart of Cardano back in 2020. It looks similar to ICP, right? But what happened after that? When the crypto market finally woke up, it hit a low of like 3 cents and hit about $3. So it 100x'd, right? So that's the beauty of ICP. It hasn't been discovered yet. Bitcoin has been discovered. Ethereum has been discovered. ICP has not been discovered, right? So ICP, which has far better technology than Cardano, can easily at least hit the market cap that Cardano hit in 2021. If Cardano could hit $3, giving it a market cap of $135 billion, then ICP can definitely hit a market cap of $135 billion, right? ICP is revolutionary. Cardano is competing with Ethereum and Solana and Sui. They're all trying to provide this layer 1 blockchain smart contract. It's not competing with the world computer. The world computer is being adopted massively, going deflationary. So internet computer should easily hit at least the market cap of Cardano. If the internet computer hit the market cap of Cardano, the internet computer will hit $250 per coin. And that is very, very, very reasonable, right? Because the way to get life-changing returns in crypto is to buy undiscovered assets that are growing exponentially. The fundamentals are getting better and better, but the asset is undiscovered and on deep discount. The market wakes up to the revolutionary nature of technology, and that's how early stage investors get paid. This isn't financial advice, but that would be my price target for ICP. So if it hits $250, that is a 33 or 34x on this price. So that is far more than Ethereum, far more than Bitcoin in the next 3 years. Again, not financial advice. These assets are risky. We're in the Wild West. Anything can happen. But if Bitcoin 5 or 10x's or Ethereum 5 or 10x's, the internet computer can 30x, right? And obviously my assumptions could be wildly wrong. Even if the internet computer 15x's, Bitcoin 5x's, and Ethereum 5x's, it still outperforms. It has to outperform, right? Because it's revolutionary technology that's being adopted. And there's almost no way it doesn't outperform because the fundamentals are rock solid for this asset. So that answers the question of which asset is the better investment.